Hello to Lottie Dottie everybody. This is Tim Davis coming to you guys from the Bullish Bears team. And today is May 25th right now on my clock. May 25th, 2019. It's now about 2:19 a.m. Eastern Standard Time on Saturday morning. And like I said earlier in the trade room that I told you guys that once I got in for the night from work that I would record my weekly longer term trade ideas update video, updating my personal portfolio just to let you guys know positions that I'm currently in. And I'll probably go a little bit more in depth today because of a question that I received in the trade room. A little more depth today into some of the positions that I'm in, some of my thought process behind some of the positions that I'm currently in, and things of that nature. So let's get right to it. Okay, so you guys know I'm still bullish on the marijuana sector. This CTST has not really done what I wanted to do over the past couple years, and actually I've been monitoring this marijuana sector in general, and looking at some of the laggards and some of the ones that have not lagged as much as some of the others. And it's like the marijuana sector is starting to weed out some of the weak links, and then some of the winners you're able to pick out. And there's two that I have my eye on specifically, which is Kronos, CRON, and the other one is Canopy Growth. So as I go along, you'll see that I did add a longer term position on Kronos, and I'll probably add one on Canopy Growth maybe after they report earnings in about next week, I think. Okay, so CTST, I still own shares there. TLT, which is a bond ETF. This is a pretty much is a defensive play because of how the markets have been trading over the past month or so. So this is my thought process behind TLT. It's a defensive play against the way the market is currently running with the volatility as high as it is, and the market's wild swings on a daily basis. I think right now these summer months could be pretty hard for stocks, so you got to be careful and have some defensive plays on. So TLT is one of my defensive plays. Enter the vertical call spread expiring June 21st, 2019. Into this trade on May the 22nd, 2019. I bought the 127 strike call and sold the 128 strike call. My break-even point here at expiration is 122.75. My total cost of this trade was $75 per contract. Maximum profit potential is $125 per contract. First target goal is to see the stock price reach at least 128 prior to expiration. Now the SQQQs, I still have this one here I just noticed, but I'm out of that position now because the SQQs recently, I want to say it was today or yesterday, had a reverse split, and I'm not too familiar with the reverse splits. When I saw that action, I just sold my position, didn't lose anything as it was at break even at the time. Sold my position, and I actually exited that position and entered the QQQ puts spreads, and I'll show you guys that later. So I just didn't take this one out of my update, but the SQQQs, they had a reverse split, and I think the symbol may have changed. GDX. Now I do have GDX. This is a new position I added into the vertical spread on GDX expiring June 21st, 2019. Into this trade on 5/23, May 23rd, 2019. Bought the 21 strike call and sold the 22 strike call. Break-even point here at expiration is 21.30. Total cost of the trade was $30 per contract. Maximum profit potential is $70 per contract. First target goal here is to see the stock price reach $22 at expiration. GDX is pretty much just another way to play gold. It's the gold miners. Normally when gold starts to run, normally the gold miners normally run shortly thereafter. And I'll show you guys my thought process on the gold trade as well when I get to the charts. I'll show you guys movement in gold, what I'm watching on the weekly and the monthly charts, weekly, monthly, and daily charts to show you guys what I see that could be in the short term and longer term horizon, and which is why I am ready to play another gold position to the upside. GLD, bullish on GLD. Enter the vertical call spread on GLD expiring July 19th, 2019. Into this trade on May the 22nd, 2019, buying the 121 strike call and sold the 123 strike call. Break even point here at expiration is 121.81. Excuse me. Total cost of this trade was $81 per contract. Maximum profit potential is $119 per contract. First target goal is to see the stock price reach at least 122 prior to expiration. Okay, PRTY is one that I saw had a great earnings report. I want to say when they reported about a week or two ago. So with this one, even though the market is very volatile right now, I decided to keep this one as a longer term play after the market settles. I think this one has great potential because of the earnings beat that they had recently. Not only that, the stock has been oversold for so many months and several years, I believe. I think it's time for a turnaround in this particular position, which is why I stretched this particular position all the way out to October to give the market some time to finish its flush out, and I think this one will have a chance to um, be successful and have a great trade. So with this one, I entered a vertical call spread, which doesn't expire until October 18th, 2019. Entered this trade on May the 8th, 2019. Bought the 10 strike call and sold the 1250 strike call. Break even point here, expiration is 10.35. Total cost of the trade was $35 per contract. Maximum profit potential, $215 per contract. First target goal is to see the stock price reach at least 10.50. However, after the market finishes its flush out sometime during the summer, maybe this market can rebound and assist PRTY also rebound a little bit stronger along with the market prior to expiration. And more than likely, I'll probably hold this until we reach $12 if it happens before October. PCG is another one. Looks like it's a bottoms up type of play, and I'll show you guys the chart here shortly. But entered a vertical call spread on PCG expiring July the 19th, 2019. Entered this trade on May the 21st, 2019. Bought the 18 strike call, sold the 19 strike call. Break even point here expiration is 18.46. Total cost of this trade was $46 per contract. Maximum profit potential $54 per contract. First target goal is to see the stock price reach at least $19 by expiration. GLD, I added another position of GLD because of the action that I saw in gold on this past week. I think this one may have had before the other one. But this one entered a vertical call spread which expires in June 21st, 2019. Entered this trade on May the 21st, 2019. Bought the 120.50 strike call and sold the 122 strike call. Break even point here, expiration is 121.07. Total cost of this trade was $57 per contract. Maximum profit potential is $93 per contract. First target goal is to see the stock price reach at least 121.50 prior to expiration or by expiration. Here we go, Cron. And today, this is a longer term spread because I want to give Cron some time to make it through this market volatility. So this one entered the vertical call spread, which does not expire until January 17th, 2020. Entered this trade on May the 24th, 2019. Bought the 17 strike call and sold the 18 strike call. Break even point here at expiration is 17.35. Total cost of this trade was $35 per contract. Maximum profit potential here is $65 per contract. First target goal is to see stock price reach $18 prior to before expiration. Now with this one, I'll be watching this one over the next couple months. If for some reason I reach my target goal well in advance of January, then more than likely I will sell, take profits, and enter another bullish position on Cron. So I have plenty of time for this to play out. Okay, BKE is a new one that I entered. This one actually, I received the email from another alert service that I follow. they mentioned this BKE as a bearish position. Because of a earnings miss and because of the way the market is in such a volatile state and pulling back, I'm always interested in looking for a couple other bearish plays that will probably work out very well and have a faster downturn than some of the other positions if it's already in a bearish state due to an earnings miss. So BKE was one of those. It had an earnings miss recently, and the sentiment for future sentiment did not look good for the company on the earnings call. So I entered a naked put on this one, just a naked put on this one. I don't normally enter naked puts, but I think this one, with the market sentiment and the earnings miss, this thing has the potential to really, really break some support levels. So into the naked put, which does not expire until July the 19th, 2019. Entered this trade on May the 24th, 2019. Bought the 15 strike put for a cost of $75 per contract. First target goal is to see the stock price drop below $15 by expiration. Like I said, it's had a bad earnings report, and with the market uncertainty, this could easily drop below $15 before expiration. So that's the reason why I purchased this one. Okay, Microsoft. In general, I've been watching Microsoft for a while, and I noticed that the tech sector has been coming under pressure here recently. Microsoft is one of the ones that I saw had a nice breakout earlier this year and broke out above some key levels. So I've been watching the Microsoft, and I was just saying to myself that eventually this is going to have to retrace some of that move. And while the markets are weak, especially the tech sector, take a look at the Microsoft longer term charts weekly and daily charts, and it looks like it is ready for a reversal. It's currently in overbought status. So Microsoft, temporary bearish position. I'm not bearish on the stock long term, but short term, I think it is time for Microsoft to have some type of pullback. Into the vertical debit put spread on Microsoft expiring June 21st, 2019. Entered this trade on May the 23rd, 2019. Bought the 126 strike put. Sold the 124 strike put. Break-even point here at expiration is 125.13. Total cost of the trade is $87 per contract. Maximum profit potential is $113 per contract. First target goal is to see the stock price reach $124 prior to expiration. IWM. IWM entered a vertical put spread expiring June 28, 2019. Entered this trade on May 23rd, 2019. And pretty much IWM is just the ETF for the Russell. Bought the 143 strike put and sold the 142 strike put. Break-even point here at expiration is $142.79. Total cost of this trade was $21 per contract. Maximum profit potential is $79 per contract. First target goal here is to see the stock price reach at least $142 by expiration. The last position I will go over is the QQQs. So like I said earlier, the QQQs, I just went in here and entered a vertical put debit spread on this one, which doesn't expire until June 16th, 2019. Entered this trade on May 24th, 2019. Bought the 178 strike put, sold the 177 strike put. Break-even point here at expiration is 177.62. Total cost of the trade was $38 per contract. Maximum profit potential $62 per contract. First target goal here is to see the stock price reaches at least 177 by expiration. Now let's take a couple of looks at the charts. Okay, before I proceed, I'm going to take a look at the major indices and show you guys a couple of things that kind of stand out to me. And I'm going to show you this first of all on my stockcharts.com account, and then I will revert back to Thinkorswim to take a look at some of these charts and a few other ones, and give you guys an overall synopsis of my my view right now for the markets. Okay, this is a weekly chart of the Dow Jones. What I'm going to point out to you guys is how overbought we were on the weekly chart for quite some time in general, from I would say from 2016 up until about 2018. And then we came out of this overbought. All right, look at the RSI. And since then, the markets have actually, had some struggle. So we came out of this overbought RSI area, and it has been, pretty much all over the place. So the last 2 years, markets been up, markets been down, and we had the big old downturn back in December where we actually touched the 200-day moving average on the weekly chart. And we made a massive rally. But notice how we made a massive rally, but we did not take out that prior high of 27,000. Got up to a certain level, and on the weekly chart, it looks like the market is starting to roll over. Okay? And if you look at a couple other indicators that I like to take a look at here, look at the Williams percentage. Williams percentage normally gives you forewarning or some previous warning of where the markets could be heading. And this Williams percentage was in the overbought area for quite some time, and for now, it's been slowly inching towards the oversold area. So I'm looking for this market to continue to until it gets to the oversold area on the Williams percentage on a weekly chart before we see any type of good rebound. And even then, a rebound could possibly be short-lived. Okay, look at full stochastics as well, right here and close to the bottom of my indicators charts here. Full stochastics, like it rolled over as well. It is showing a bearish sentiment on the full stochastics as well. Okay. So let's take a look at the S&P here before we switch over to take a swim. S&P pretty much looks the same. Okay, what it actually looks like to me, it's like you got a triple top. There's a triple top here. It's like to me. And sometimes the triple tops can be a bearish formation. And as you can see, Williams percentage has been trickling down towards the oversold zone. Full stochastics also showing much weakness. Okay, with that, we'll go ahead to the Think or Swim platform. Okay. A couple things we'll point out here. Look at the weekly chart here as well. See some areas that I highlighted of some highs. So you see where we got this peak up here. We reached that same peak on the weekly chart back around October or September of last year. And then we trickled down for several months after we hit that peak. We're back here again. Are we going to do the same thing, trickle down for several months? Possibility. It's a huge possibility. Look at the full stochastics here. It is totally rolled over on the weekly chart. So these markets have a lot of weakness built up in it. So no one knows what's going to happen. However, there's a lot of sentiment in the market right now that is a negative sentiment. So I'm playing a lot of defensive plays, which is why my portfolio is vamped the way it is. Taking a look at the daily chart. As you can see, price action on the S&P actually dropped below its 50-day moving average, and it's hovering just above its 200-day on a weekly. On a daily. Hovering just above its 200-day. And I am in the camp to believe that it's going to break this 200-day. That's what I believe. So I'm playing a lot of defensive plays right now. I don't think we're going to see a lot of rallying in this market. during these summer months. I think it's just time for the market to have a pause. Let me go back over here. So look at this weekly chart. I'm show you guys what we did last time and where I think we may have some trouble, because last time when we got hit this peak back in 2018, beginning of 2018, and we started to roll over. Got a nice bounce. Had beginning of 2018 was very, very rough. Made it back down to the 50-day EMA, and we kind of bounced around for a couple months. Then we rallied back up to almost two new highs, and that was back in October of last year. And then we dropped below the 50-day moving average. So we didn't drop below it over here on the left side back in 2018, beginning of 2018, but towards the end of 2018, or I say right after July, we started to roll over. Made it down to the 200-day, and we rallied up. So we rallied up for several months, 2019, all the way up until April. So I think the tides is just turning. It's time for another reversal. Okay, and this reversal, nobody knows what's going to happen, but you guys, if this thing does not hold this 50-day moving average, it could be headed back to the 200-day. That's just something to keep in mind. And this is on the weekly chart. All right. Taking a look at the Dow Jones, and Dow Jones looks even weaker to me. Weekly chart, the Dow Jones, already back at this 50-day moving average, and I don't think it's going to hold it. That's just my opinion. I do not think it's going to hold it. I think it's going to break it eventually. And if you look at the MACD is already just starting to show a bearish crossover on the weekly chart. Got a bearish crossover there. We tested this 50-day moving average this week right here. We bounced off of it, tested it again this past week. And I think next week is probably the key. It could actually break this level. So the markets are not really strong right now. They're showing a lot of weakness. All right. So now with that, with the overall look at the markets, now let's take a look at a couple of my defensive positions. All right. So normally when the markets start to struggle, TLT is one that seems to go the opposite direction. So one thing I like about TLT is that you can see this longer term chart on the weekly it's really been, it has not been in a bad way. We're back above this 200-day moving average on the TLT. Full stochastics looks very strong, showing strength. My full stochastics at the bottom. And the 50 EMA and the 20 EMA is crossing back above the 200-day as we speak, in the weekly. So there's a lot of momentum in TLT. Daily chart, TLT, it looks like it's in an overbought area, but I still think there's still more strength in here, so I'll be holding this position even through any pullbacks until expiration. Let's take a look at gold. This gold is also another one of those defensive plays. Then I'll look at the GLD itself. And one interesting thing about gold, especially on this daily chart, I don't know if you guys see this, but it looks like to me it is really, really holding up strong on this daily chart. On this 200-day, it's been beating up this 200-day moving average for over a month. It would dip below it just a little and come right back up. Dip below it just a little, come right back up. think this gold market is setting up for a pretty decent rally. So once we get out for this slide. Now, the weekly chart of gold is what I've been watching for a long time, and what I've been interested in is every time these stochastics, the full stochastics, get to this line, get to this bottom line right here. I want to say it's 25, I think. But anytime it gets below this full stochastic goes below this line, I'm looking for a buy signal. I'm looking for somewhere to jump in because I think it's going to rally like we did here. So last time we got around the bottom of the stochastic, got towards the bottom, it hovered there for a little while. Then eventually, remember August, September, it started to pop. Started to continue rising. Had some weakness here, but continued its march up. I think we're at that point again. Back down to the bottom of stochastics. I think we are setting up for some kind of reversal to the upside. So that's why I jumped in my gold plays, and I'm going to hold them and ride the volatility and see if we get this bounce off of this 200-day EMA on the weekly. So with that said, I took a look at GDX and GLD, which are the two positions that I decided to get myself prepared for we go and look for a potential bounce. Now on the 4-hour chart of GDX, you'll see how the 61.8% Fibonacci retracement level looks like it's been a strong area of support. Got back down here. It looks like we're hovering right above that between $19.80 and $20, a little bit of $20. I'm looking for a bounce back above the 200-day on the 4-hour. On the weekly chart, again, in the oversold area on the full stochastics. That's normally always a key sign, especially when markets are struggling. Gold could possibly get a rebound. And I think GDX is just in the camp waiting for that good rebound. So I entered the position already, preparing for the rebound, possible rebound rally. All right, GLD. Same case scenario. Look how it's been in a downtrend on the weekly in general for quite some time. But what you'll notice, even on this pullback, it's kind of weak. Even in this short term, what you'll notice is nice little triangle pattern. Nice little triangle pattern. Markets looks ready to break out this triangle pattern. Same way I showed you guys before when I got into Disney, when Disney was forming the same type of flag pattern. Gold is doing the same thing, like it's ready to break out of this pattern. Hence, it's the reason why I decided to get in GLD. Okay. Let's look at a couple more. Let's take a look at one that I can think off the top of my head. Party City. Okay, well, Party City. To me, Party City, it just looks so oversold. So I'm thinking this thing has room to bounce. So we'll see. Looking at the weekly chart, full stochastic, same thing. Got down in the oversold area and is starting to bounce on the weekly. So I'm thinking this thing has at least the ability to break probably this 20 EMA on the weekly and possibly make it up to the 50-day on the weekly. If it does that, that's where I'm looking to take my profits at. That'll be a nice gain between now and October. But I'm in the camp to believe that it can rally even higher than that. That's what I believe between now and October. Now, it looks like we could be close to some temporary overbought area, but that may not last long. in the 4-hour charts, like we got an overbought area on the full stochastics, came back down below it and just hovered right below it. Hence this flag pattern you see here. I think the next step is a move back up towards a 200-day on the 4-hour chart. That'll take it just around $9 or above. That is Party City. Let's take a look at Microsoft. All right, Microsoft, to me, it just looks like it has not been ready to join the downward spiral with the rest of the tech sector, but I think it's coming. I think it's coming. Look at the full stochastics. It's a bearish crossover here in the full stochastics that happened while the market was, while Microsoft was actually up. But if you look at this indecision in these weeks, past couple of weeks, Microsoft was up to as much as 131 at one point, but it has slowly been trickling downward and has not been able to regain that 131 level, and I don't think it's gonna regain it. So I'm gonna sit in this Microsoft put position until we get the drop. This could actually pull back to this 50-day EMA, which I think it will, along with the rest of the market. So I just think it's time for Microsoft to take a breather along with the rest of the market. So that's my outlook on Microsoft. Now let's take a look at, let's see, what else do we have here? So we took a look at the Qs, took a look at TLT and gold, looked at those. Checked out Party, PCG, and Cron. Let's check out those two. So PCG is another one that looks like a bottoms up type of play. Now this is definitely a short-term play because if you look at the full stochastics on the weekly chart, like it's almost down to the oversold area. But I think this thing has a potential to bounce back up at least to its 50-day EMA, which would take it up to around 25 bucks, which is what I'm just looking for. Looking for a short-term play in this one. So I've really been concentrating on the daily and the 4-hour chart because I'm looking for a short-term bounce. So here, if this thing just bounced from where it is on the daily from 20 up to 23, 25, that would be a good area to take profits on this position. And I think it has the potential to get that bounce. And I'll sell there if we get that bounce and take profits. All right. Cron. These marijuana stocks have just been all over the place. But I think longer term, I think these things will have some more momentum in them. It just every time they take a bounce, every time these things run up, normally they pull back to a certain level before they run up again. And I think it's getting close to that time. Looking at the weekly chart, look at these full stochastics. Look at the full stochastics for Cron. And what you'll notice is that normally every time we breach below it, we get some kind of bounce. Right here, we got a strong bounce right here in August of last year. Below this line on the full stochastics and got a bounce. See the bounce here. Got below it again here in November. Got another bounce. And that one was a nice little rally all the way up to 25. We're back below it again. I think it's about time for another bounce. So that's my reason behind Cron. I'm going to give it time to play itself out. And you look at the price action on the weekly chart, you'll see how it's been resting right above his 50-day EMA, which is a good sign that it's holding support there. daily chart, it's like it's actually holding support here as well on a 200-day EMA, holding support pretty well, just waiting for the bounce. I think I'm more inclined to believe that it'll get a bounce versus a breakdown below the 200-day in a big way. So that's Cron. Now let's take a look at. All right, let's see. So we already went over the Microsoft put. IWM is just like the rest of the market. IWM is the Russell 2000. Into the bearish trade play on that one. So if you look at IWM ETF, you see how it's already starting to. Let me get rid of some of this. It's already starting to break below major moving averages. Remove drawing. So it's already starting to falter on the daily. On the weekly, it's even more defined. Of this, couldn't even make it back up close to that 173. It's like it's ready to roll over, and I think IWM is headed back. I think it's headed back to at least 140. So I'll be holding that one for a minute. And I think that may be it. We'll look at one more. BKE. So that earnings beat. I mean the earnings loss. And not a beat, it was a loss. I think it's gonna send this stock tumbling, especially with the weakness in this market. Big old red candle already on the weekly chart, first weekly chart. I think it has more room to run to the downside. $10 is a very, very real possibility on this stock. The weekly chart, the monthly chart shows a bearish crossover in the MACD. This thing probably has still room to scrape back across the bottom. And it may even, like I said, get back to 10, and that would probably be a double bottom. And not sure what happened after that. And as you can see in the daily, it already started to just roll over. So, but in general, this thing has been, in this downward spiral for quite some time, as you can see. Uh, any rally back up towards the 200 days, it's just been sold off. It's sold off. So this one has great potential. All right, guys, that is all I have for you guys. Hopefully, I was able to explain to you guys a lot of my reason behind some of the positions that I enter. This is a longer weekend. So Memorial Day here is this weekend, so the stock market will probably be closed. I'm not sure if it's closed all day, not on Monday, but so the market saw some light trading volume today. We'll probably see some light trading volume on Monday if the market opens, even more opens Monday. But that's it. That's all I have for you guys. It's my portfolio. I want to post this soon. Hopefully, you guys having a one awesome weekend and enjoy your holiday weekend. Until next time, Sid Davis on the Bullish Bears team signing off.